traders, this is Dr. Yang's Easy Trade Educator channel. This is my very first trading video in English. I made a video about Bitcoin and Nasdaq on March 23rd. That was done in Chinese, and this is an English translation of that video. Let's see how it goes. If it goes well, perhaps in the future, I will do the videos only in English. My name is Chuck Yang. Today is March 23rd. Today's market behavior is similar to yesterday's. The market opened up and closed down. However, there's one thing that only goes up and refuses to go down. That's Bitcoin, up 6%. In the past 2 months, we have been emphasizing that Bitcoin's chart has good uptrend. Last week, I made a video to share my psychology on trading Bitcoin. For financial assets that has very strong uptrend, for example, Nvidia stock, Bitcoin, etc., a lot of people are afraid of height and let it run without getting on board. Normally, the strong stocks tend to continue to be strong. Quite often, it does not give you a comfortable pullback to get on board. Now, Bitcoin is meeting some resistances. Let's take a look at the charts. This is Bitcoin crypto chart. Now, Bitcoin has just reached some key resistances that can be looked at from several aspects. First, it is the support of last June. Bitcoin broke this support then. This old support has become resistance now. Bitcoin has reached here and meet this resistance for several days. 1, 2, 3, 4, 5. Okay, 5 days now. Bitcoin unable to break through this resistance for 5 days. I think it is accumulating energy. So this is last year's support tending to resistance. Secondly, from the perspective of Fibonacci extension, I just draw this Fibonacci extension levels diagram. I define 3 points, starting from the previous major bottom, then to the previous high point, then down to the recent low. By defining these 3 points, the tool draws me this Fibonacci extension levels diagram. Currently, Bitcoin just reached this 100% extension level. This extension level means the gain from the recent low to the current price is equal to the gain from the previous major bottom to the previous major top. From the perspective of Fibonacci levels analysis, it has reached this key level. You may call it resistance, or you may call it target, whatever you prefer. Thirdly, we can look at Bitcoin futures. This is a chart of Bitcoin futures. This thick line at $25,000 is an 8-month-old resistance. This resistance was broken a week ago. It becomes support now. There is a big downward gap in June of last year. The upper end of this gap is a major resistance at the next level. Bitcoin futures have met this resistance and stayed here for 4 days now. We mentioned earlier that Bitcoin crypto was blocked by resistance for 5 days because crypto trades 7 days per week, but futures trades only 5 days per week, so it has stopped here for 4 days. Bitcoin has gained 6% today with increasing volume. The unbalanced volume indicator, as shown in the yellow line, has also been going up nicely to support the price move. In my opinion, it is just a matter of time before this resistance gets broken through. It appears to me that Bitcoin as a tradable financial asset has much better trend than the stock market indices. It is in an obvious upward trend with higher highs and higher lows, with bullish formations of moving averages. This is much easier to trade than the struggling stock market indices. My objective is to profit from the financial markets. My objective is not to do difficult analysis or studies on difficult charts. I don't want to do hard work and even take risks on those challenges for possible failures. Therefore, personally, I prefer to look for areas, sectors, or industries that are easy to trade. Some folks study S&P every day and trade that. I think that's a very challenging thing. Currently, S&P, Dow Jones, and the Russell 2000 are struggling. They are obviously not in uptrend. I don't want to buy against the downward trend, but short selling at these low levels are dangerous, so I avoid them completely. However, QQQ, the Nasdaq 100, and the technology sector are in an obvious uptrend. These are much easier to trade. I do these easy things. My objective is to profit from the market. Also, when the market index is confusing and difficult to determine which way it is going, I take a look at its component stocks. If the dominant components have good trend behavior and chart pattern, that will indicate that the associated market index will also go that way. Thus, we will take a look at the technology stocks. The ETF is XLK. We take a look at the semiconductor. ETF is SMH. Both of these are in very nice uptrend. Thus, I think Nasdaq 100 will very likely continue go up. Also, I will share my 3-line charts on the stock index futures. Let's take a look at the major market indices and compare them. I will start with the worst one, the Russell 2000 ETF, IWM. Its chart looks very bad. Of course, it has fundamental problems. I think it has to do with the banks. The Russell 2000 index contains many small bank stocks, many small biotech stocks. The current crisis of bankruptcies in the banks is not over yet. People are still worried about the bank stocks, especially smaller regional banks. The Russell 2000 contains many small bank stocks, and that takes its toll on IWM. The Russell 2000 ETF. IWM today closed below the previous bottom in December. It is obviously not in uptrend. Its chart has lower highs and lower lows, and the moving averages are in bearish formation. Russell 2000 is the worst of the market indices. The Dow Jones Industrial Average ETF, DIA, is also in downtrend. The chart now has lower lows and lower highs, and that's exactly the definition of downtrend. Its moving averages are in bearish formation. Since it went up too much at the end of last year, it is still far away from last year's bottom, but its trend is down. Not good either. Now S&P. This is a chart for SPY. As far as its trend goes, it depends on how one looks at it. One may say, well, in the time frame of the past 2 months, it has lower lows and lower highs, and it's in the downtrend. One could also argue that in the time frame of the past 5 months, it could still be in this upward channel. On this day, it did break down the lower edge of the channel intraday, but it came inside the channel at market close. This channel is drawn by starting with the upper channel lines first and use that as the basis, then draw the parallel line down here. Even if it could still be considered in a, quote, upward trend, end quote, in this context, the short-term trend is down and pretty bad. Now the Nasdaq 100 QQQ. This is a totally different story. The moving averages have never crossed over to the downside and still remains in bullish formation. The only trouble is the February high is the resistance now. Now QQQ faces this resistance and paused for 2 days now. Whether it can get through this February resistance or not, we will discuss next. Here's another perspective. I like to look at charts with closing prices only without candles. I made a video last week where I talked about QQQ's W-shaped double bottom formation. It has a big double bottom pattern of 4 months duration. The blue thick line is the neckline of the W bottom. It was resistance last year and got broken through in January. Now this resistance line becomes support. QQQ corrected back to the neckline and then got support and bounced off to the upside. When we keep things simple without the candles, we can see things more clearly. Also, if I zoom in, the unbalanced volume of QQQ looks terrific. It is reaching this year's high. This tells us that QQQ, when in up days, it has higher volume, and when in down days, the volume is lower. And that makes it possible for the unbalanced volume to go up. And this is certainly a plus for QQQ. Nasdaq has been strong, and I mentioned this in my video a week ago. Why I could see this a week ago? For one thing, despite the banking crisis that caused the whole market to tank terribly, QQQ did not break the main supports. The yellow 200-day simple moving average, the purple 100-day simple moving average, and the thick blue 50-day exponential moving average. For another, we mentioned earlier this neckline of the W double bottom provided effective support to QQQ, and that made it possible for me to be bullish on QQQ a week ago. Of course, another important reason is that I took a look at the QQQ's components. The top 10 components are super big companies, and they account for 40% of the index. Those components stocks, most of them have very good bullish formation. For example, Apple. Apple has a head and shoulders bottom formation. Left shoulder, head, right shoulder. This is the head and shoulders bottom formation. Apple has broken through the neckline of the head and shoulders pattern. The moving average lines are in bullish formation. Very good chart. Next, Microsoft stock. Microsoft chart has higher high and higher low. Very good chart. The moving average lines are also in bullish formation. Obviously, this is a chart in nice uptrend. Next, Google. A month ago, Google went up big because of earnings report, but then quickly declined due to investors' perceived competition from Microsoft on ChatGPT. However, during the recent banking crisis, Google stock refused to go down with the market. Then it led the rally to the upside and helped Nasdaq a lot. It is again back above the yellow 200 moving average line, and it has higher high and higher low, and moving average lines are in bullish formation. Next, Facebook. Well, this chart is such a nice uptrend that there is no need to explain. Its moving average lines have always been in bullish formation. Great chart. Next is Amazon. Although Amazon is not quite so strong compared with the earlier ones, it is also above 50-day exponential moving average. Also in the bottom chart is also above the 50-day simple moving average. Of course, this is the weakest stock among the fund stocks. Next is Tesla. Tesla's current trouble is the overhead resistance zone in blue. Tesla recently corrected after hitting the blue resistance zone. Its moving averages have not crossed the downside yet and did not cause the bearish formation. Currently, it's stabilized here. It may still struggle for some days due to the resistance above. If it can break above the resistance, it will have a head and shoulders formation, and then will take off. I think it will likely go up. Here's the best stock, NVIDIA. I don't need to explain this. The trend is on the move. Ooh, up, 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 non-stoppable. Next, AMD. Also great chart. No need for words. Last one, Netflix. Netflix market cap is not so big to impact QQQ. Since we talked about the fun stocks, we will take a look at Netflix. It is relatively weak recently. However, today it's up strong. It's up 9%. Wow, normally I would wait until the moving average crossed to the upside to have bullish formation before getting excited. However, since it is up so big today, when the broad market declined, I think it is turning to the upside. It closes above the 50-day exponential moving average. The 50-day simple moving average is in the chart below. It is not above 50-day simple moving average yet. The bottom chart has the Bollinger Band. Netflix just crossed the midline of the Bollinger Band. In the upper chart, I prefer the exponential moving average for trend following. Well, this appears to me is a W double bottom. The neckline is broken through with strong candle thrust. The aggressive trader may start buying now and then add during pullback. Wow, today's volume is huge, more than twice of the previous volume. Unbalanced volume has reached 1 month high, and that supports the rise in price. In the past, Netflix itself, while somewhat small, but its upward move often bring up other stocks to go up together, and that way indirectly affecting QQQ index. Now let's look at some ETFs. FNGS. This is the ETF for the fund stocks. Wow, it has reached 11 months high. This is consistent with the stocks we just looked at above. Now let's take a look at the technology sector ETF, XLK. Well, this has broken through the February high resistance. In fact, it has reached 1, 2, 3, 4, 5, 6, 7 months high. If technology ETF has reached the 7 months high, I think QQQ will most likely break through the February resistance. Lastly, SMH, the semiconductor ETF. Well, this has reached 12 months high. Again, moving averages are in bullish formation. Nice chart. In conclusion, XLF, the technology ETF, has good chart. SMH, semiconductor ETF, has good chart. The fund stock components all have good chart. Although QQQ is fighting the resistance, I think it will likely break through the February high resistance. I'm a trend follower. Trend following is Wall Street's first investment rule. The trend is in the upward direction for QQQ. I try not to be a smart ass to go against the trend. If SPY, DIA, and IWM had good charts, I would be very bullish on QQQ. However, since the other three ETFs are not cooperating, my bullishness on QQQ lies at 60%. So I think 60% chance that QQQ will go up. Thank you for watching. See you next time.